Every other trader will tell you it's impossible to pick a market top and a market bottom. Today, I will prove the opposite. In order to make this even more interesting, I've not only picked the market top and the market bottom, but both of those trades gave me double-digit results. And now, just for the most skeptical amongst you guys, I would say it is actually impossible to pick a market bottom and a market top. Sometimes you might end up picking them, but it doesn't necessarily mean that you mean to pick a market bottom and a market top, and this should not be a priority. In this video, this is exactly what happened. So I managed to get into two trades, and they both were at the market top and the market bottom. Kind of flipped the markets. Once I was in a long, the second time I was in a short trade. The most interesting thing is that both of those trades, as I said, are double-digit returning trades, and I will walk you through both of those trades. So let's get started, guys. Alrighty, guys, let's start with the second trade first, and this is where we shorted the NASDAQ. As you can see here, the price is going in our direction. So this happened all really fast, and this was a trade that took less than, I would say, 10 minutes. This is where we closed the trade. This trade gave me just a little over 11x's, or 1 to 11 risk to reward ratio. This is the 1 minute chart, so you can imagine the speed of action here. So this was 1, 2, 3, 4, 5, 6, 7, 8 minutes, less than 10 minutes. We are actually having 11 axis. And just to show you the other trade, guys, so this was NASDAQ. Then we also opened another trade on NASDAQ this morning, and this is where we took our profits. So this second trade actually gave us slightly more. It was 1 to 17 risk to reward ratio. We entered initially, and the stop loss on this trade was actually quite small. It was less than 10 points. So the price almost went down to retest our entry, but then it shot up. I was almost closing the trade at the zone, but then there was the CPI data coming from the United States. So I waited for this trade to pump a little bit more. In the end, I couldn't materialize on the last 10 axis. So this could have been almost 1 to 28 risk to reward ratio. But in all honesty, I'm happy with the 17x because this was according to the rules, and I exited the trade, and then I managed to re-enter and basically flip the market, as I said. So this was literally the opposite side. I took the opposite side of this trade. So that's where we entered, and we exited 8 minutes later, as I said, for 1 to 11 risk to reward ratio. So maybe you didn't pay attention, guys, but as you can see, this trade here, we literally picked the top of the market. And this is the 1 minute chart. So this is where we entered. According to our system, this was a very good entry. So I didn't hesitate, and I short the market. And pretty much the same happened with the morning session, where I managed to pick, it wasn't the low of the day, but it was the low of the day considering the London Open. So this is where we entered in a long trade. This was my original setup where I entered in a long trade. Minutes later, the trade was already a risk-free trade. That, as you can see, the price went to retest the entry. This, if you watched one of my previous videos, I talk about stop losses. Never move your stop loss, because this would have been a break-even trade. You would have missed on a 17x trade, and then this is where FOMO kicks in. Guys, just make sure you do everything possible not to move your stop loss, especially at the early stages if you have a high probability system, because this is where the price is retesting the entry multiple times. If you move your stop loss to break even, you're simply going to kill your performance. You're not going to have the same type of performance as a consistently profitable trader, because don't forget that traders who've been doing this for many years, they simply don't move their stop losses too early, because they know the price doesn't move in a straight line. It always retests the entry multiple times. And as you can see here, this was where the London session opened. We literally picked the bottom of the session, and then the price just skyrocketed from there. Alrighty, guys, so I don't want to sound like I have some sort of a magic ball or predictive powers. I can assure that I'm also taking losing trades and break-even trades. In fact, the majority of the trades that I'm taking, they're break-even trades, but this is all part of the system. If you are not expected to face losses, and if you don't have a system that can actually take them and make them part of your plan, so to speak, and don't make a big fuss when you're having losses, then you probably won't be able to sustain any trading system. So you need to be very careful when it comes to losses. If you don't have a trading edge that can actually cover your losses, then you are in danger. But if you have a trading edge, like if you're able to get into very high risk to reward ratio trades like these ones, then you should be one step or even two steps ahead of everyone else. Because don't forget that 99% of traders out there, they're trading on outmoded 1 to 2 or 1 to 3 risk to reward ratio systems, which, to be quite frank, this type of system, it won't really take traders further. This will not give enough of cushion to protect you versus against your losses. So if you just look at it from this perspective, if you're joining the trading scene and thinking that you're going to be able to make it if you have a very high win rates, and your win rate is, let's say, 80%, and you're able to take 10, 20 trades which will give you 1 to 2 or 1 to 3 risk to reward ratio, I can tell you I'm going to work over the long term. Why? Because when this win rate starts falling and dropping, then you will look and do everything possible to be able to match again the win rate. You will start over trading, changing instruments, changing the strategy. Over the long term, 3 to 6 months, your account will blow up if you're lucky, because usually accounts blow up in a lot shorter periods of time. And it's statistically speaking, and if you read the fine print in every broker, especially if it's a regulated broker, and hopefully you're trading with a regulated broker, the fine print shows you that depending on the broker, between 85 and 95% of day traders lose money in the first 3 to 6 months. So this is a statistic that actually stands there for a reason, and just try to pay attention what percentage of the videos on YouTube that you will watch that are trading related will basically, first, they won't really tell you that, the 85 to 95% stat, but most of those videos, they would concentrate around this stat. So very low risk to reward ratios, somehow high win rate. So you don't really care if your win rate is 50, 60, 70, 80%. What you care about is what is the possibility of maintaining this win rate. And I can guarantee you, this is close to zero. That's why in order to make a living from trading, you definitely need to have a system that gives you a trading edge. This, my dear followers, is not a trading edge. You need something a lot stronger, something to cushion to protect you from your losses, because in all honesty, you need to consider losses as part of doing this business. In any other business, you will have losses in the form of expenses. So expenses in this business are your losses. So in order to sustain your trading account and to be able to move forward, you need to have a trading edge or a trading cushion that will protect you from those losses. So the only way you can sustain that is if your risk to reward ratios are actually much larger than the regular 1 to 2, 1 to 3 that everyone else is aiming for. So you can actually be able to sustain that over the long term. So R to R, or risk to reward, is much larger than the overall risk to reward, larger. Okay, so I'm not trying to make this video very fancy. I'm just being as natural as possible. But the more I'm speaking with traders, and not just beginner traders, which is really frustrating, the more I do realize that less and less people are paying attention to these bits. Everyone is fascinated by the high win rates that the system can reach, but they don't really ask the question, first of all, how achievable is that over the long term? Is it sustainable? And what sort of emotional swings they would go through just to sustain this win rate. So just to sum it up, guys, don't fall victim to the high win rate, low risk to reward ratios. I would like to call them schemes, because this simply doesn't work over the long term. You need to concentrate, find a trading edge, whatever it is, but make sure that this trading edge has enough cushion, enough room to cover for the expected losses, because losses are part of the game, guys. And on the bright side of things, guys, it is Thursday, which means tomorrow is Friday, so there is another reason to celebrate. Until next time, bye.